There's no better feeling than having beaten 155 of your peers. It's that feeling of success, that feeling of you're first. I stay focused thinking it's a life lesson and the competition is very, very good. The weak ones don't survive. Or within any business, if you come out on top, the feeling is beyond what I can tell you. So that's what I play for. That's the feeling I play for. That's why I'm here.
Best Western, the world's largest hotel chain, presents Best Western Premier, a selective group of Best Western hotels and resorts across Europe and Asia that offer business and leisure travelers an exceptional level of service, quality accommodation, and array of amenities that translates to outstanding value. Stay at Best Western, the answer you're looking for. Contact us or your travel agent or visit bestwestern.com.
RCM, a company of Allianz Global Investors, brings you the Asia Pacific Index Report. Asia Pacific Index Report is brought to you by RCM, a company of Allianz Global Investors.
China in Focus, brought to you by ING Private Banking. ING Private Banking, taking you further.
China's markets have been adopting something of an attitude of their own. When everybody was going hip hip hooray as a result of the Fannie and Freddie nationalization, the Treasury-led bailout, they were the lone major market to head south on more worries about glut of stocks coming and continuing spiraling down of the economy. Well, U.S. stocks got it back into lockstep this morning, kind of a thud back to earth with reality. Lehman Brothers down a record 45% in New York Composite trading. Meantime, the S&P 500 posting its biggest loss in well over a year and a half on reports that these talks with Korea Development Bank for a capital infusion in Lehman probably all but hit the skids. The iBank says it'll announce strategic initiatives and quarterlies tomorrow. Joining us today on the show at this juncture is Mehraj Mattoo, Commerzbank's global head of alternative investments, normally based in the UK, but attending the hedge fund conference going on in town, which I took part in yesterday. Morning, sir.
Hello.
Lehman, kind of the bad boy of the week this week. Is all the goings on in the financial space? What kind of an impact are they having on your universe?
Hedge funds obviously are not immune to what's happening in the broader markets, and clearly in August, the performance of many of the hedge funds got caught on the wrong side of the trade when it came to financials as well as commodities. So that was one of the reasons why hedge funds were largely down in August. So clearly hedge funds are finding it difficult to trade in these conditions.
Now, why would they be doing that? Because one of the virtues of hedge funds is the ability to react very, very quickly. I mean, you're not constrained, you're not bound by rules that say you have to stay 100% invested in equities like a traditional long-only mutual fund. Hedge fund operators should be able to read the tea leaves and place the bets accordingly. I mean, they do have a very, very large arsenal at their disposal. Why are they being dragged down by the same set of factors?
I think one of the key reasons really is it's reflective of the broader uncertainties in the market. Even hedge funds are getting it wrong. And that's a very good indicator of how difficult the markets are. So I don't think it is to do with hedge funds' lack of ability to exploit markets. I think it just reflects the difficulties in the markets. Even hedge funds are getting it wrong. That's obviously the broader scenario. Clearly, hedge funds have suffered a number of fronts. One of the key aspects of hedge fund trading really is to use leverage, and leverage is obviously in short supply. So hedge funds are not able to do what they were historically able to do with many of the strategies. Hedge funds obviously are also, over the last few years, as you know, many of the hedge funds became activist. And hedge funds, instead of actually trading in and out of the markets, hedge funds became relatively longer investors. So for them, obviously, for those hedge funds, it's very difficult to get out of these trades in any short span of time. So they have to ride these events out. And also, obviously, a lot of the hedge funds are finding it difficult to short generally, and which doesn't help.
Yeah, that is true. They did have the ability to actually borrow stock, for instance, to take opposite positions has been a lot tougher this year because of the drying up of the whole credit pipe. It's interesting, but New Edge has just released some new numbers. Apparently, the high beta funds, those that benefit from high volatility. I guess in some ways these are arb funds, arbitrage funds have actually done fairly well. They're ahead by about 7.5% this year, which is screaming eagle performance compared with what we're seeing across the rest of the market.
Absolutely. I mean, obviously, it's easier for hedge funds that operate in that space to make money because markets are uncertain. As you know, the volatility is very high. It's not as high, obviously, as we saw in, for example, 98, and it's obviously come up the highs of this year in March, just after the Bear Stearns event. But still, the conditions are very good for vol arbitrage funds. The problem really is vol arbitrage funds represent a very small segment of the hedge fund world.
Just a few billion, right?
It's about 10 billion, just under 10 billion. It's very small.
Why is that? Is that because the markets have been so, I mean, for a while, nothing was happening, and the bane of a volatility fund or an arbitrage fund manager is markets that just kind of sit there.
Absolutely. I mean, up until early last year, middle of last year, actually, we had a good 3-4 year span of very low vol. And in fact, some of the big vol arbitrage funds went out of business. Shooter comes to mind, which had difficulty last year. But clearly, I mean, this year is different. So the ones who survived, who stayed in the business are making money. The problem really for investors like ourselves really is it's a very small segment of the market. It doesn't help.
We're at a certain phenomenon is going on. Apparently, hedge funds are. By the way, hedge funds, they still have a bit of a bad moniker, a bit of a negative connotation when they shouldn't. All it is it allows the actual money managers to deploy more tools, right? I mean, if you see overbought positions, you can short them. You can maybe establish some stop loss limits, straddles, and strips within the construction of a vehicle. Some of the managers are starting to cut their fees apparently in order to preserve capital. At least one reported in the journal yesterday, Camelos Capital, which is down like 20% this year, has told investors, if you stick with us a year and promise not to redeem in a year, we'll cut our take from 20% to 10%. Is that an ongoing theme in the industry?
Many of the hedge funds that are in illiquid strategies are obviously trying to persuade investors to stick it out, stay with them. And one of the ways they are trying to do that, I mean, clearly, many of them have gated the funds, so you can't get out no matter what. Some of them have created side pockets of some of the bigger investments, but others are trying to get investors on board. And one of the ways to persuade investors really is either to reduce the management fees, or actually get rid of the performance fees or reduce it significantly during the period for which they want investors to extend, if you like, their subscriptions to these funds.
Final question, if you can give me a quick answer on this so we can wrap up. When you have markets like China down 60%, are we going to see a proliferation of these alternative vehicles targeting this part of the world? Will we be buzzing with more activity in the next year than ever?
I think that's already happening. I think what the market conditions, especially in Asia, will do really is will promote hedge funds as a product to Asian investors more broadly than has historically been the case. I mean, clearly, if markets are down 60% and a typical hedge fund is down 15%, investors will begin to see the value of taking exposure to Asian markets through hedge funds versus directly.
It's nice having you on the show. Thanks for making time. Dr. Mehraj Mattoo joining us there from Commerzbank. Right ahead, we'll catch you up to speed with goings on.
China in Focus, brought to you by ING Private